I largely agreed with Kara on those with her points. I look at these large platforms, Google, Facebook, Twitter, perhaps. Their biggest threats are competition, maturity, and regulation. But regulation has clearly reared up over the last 3 or 4 years to levels that we've never seen before. I don't think you're going to have. I think the breakup risk of these assets is extremely low, but that there'll be increased regulations, fines, some restrictions on targeting, greater tightening up of privacy policies. I think that's inevitable with these names, and I think this social media summit today is probably more noise than anything else, but it does just highlight how much these companies are in the public crosshairs.
Right. Mark, we also spoke last hour to one trader who says he would be short FANG. He thinks basically the top is in, and our policy expert didn't disagree that they face major, perhaps Microsoft-esque challenges over the next couple of years, especially on a day when Amazon's pierced through the $1 trillion market cap marker. Would you put fresh money to work in this sector?
Yeah, we would, and we'd want to be selective. The top pick that we'd recommend right now is Facebook. I think valuation is still compelling. You can buy this at around 20 times next year's earnings. I know that's a premium to the market, but you've got here the owner of the 2 largest social media and the 2 largest messaging applications in the world, and it's trading, we think, at a discount to its growth rate. You rarely see big tech trade like that, so when it does, it's a great opportunity. Netflix is a name we also like. It's a number 2 pick with very little regulatory risk, in part because they've got tons of competition coming their way from Disney and other companies, but we actually think they can power through that. So, yeah, we're still FANG long. We're still long those 4 stocks. Amazon remains, the investment thesis there, we think, remains very much intact. Regulation is a headwind, but these ships are powerful enough to work through them.
How has Twitter turned it around? If we went back and looked at a 2-year chart of Twitter, it would be nowhere near where it is today. What have they done right?
I think they got product right. I think they also cleaned up their marketplace or their user place or the Twitter sphere. There's no question that there was a lot of abusive content that was on the site. It was also hard to navigate for a lot of new users. You've got a core group of people, news junkies, that are very much enamored with Twitter, and for very good reasons. It's a great tool for tracking topics of interest. But this company needed to do a series of things: make the site more intuitive, get rid of some of the harmful content that was on there. I think they did that, and then they also improved a lot of the ad tools that they offer to people. That's a stable, that's a very durable long-term business. We're not recommending the stock right here, but that's a clear, justifiable turnaround.